Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Let's welcome our experts then, market expert Dharmesh, Kant, Vinit Bolinjkar of Ventura Securities and Ashish Chaturmohta of Sanctum will join us on the show. Today on Hot Money, we'll discuss stocks like Power Grid, Tata Global, NMDC, and we'll ask them for a stock pick after the big fall that we've seen in the market so far. So let's start with the first stock, and that is Power Grid. It's a good defensive stock, but it's a rather volatile market. So what we are asking is Power Grid a good defensive stock to buy in such volatile market? So we'll ask our guest about Power Grid. Vinit, any view on Power Grid? Should this be accumulated?
Yeah, this can be accumulated for very steady returns. Around 240 would be a good price target over the next 2 to 3 years. Not a great compounder, but in a kind of a volatile, if you want to provide stability to your portfolio, this is one stock. It's in a good space, which is into T&D. Second is it is trying to diversify into railways and telecom business also. Telecom, I think, will be the next growth area. So keeping this in mind, I think 15 to 20% upside from these levels is not difficult to think in the next 1.5 years time. Okay,
so 15 to 20% upside in the next 1.5 years is something that Vinit speaks about. Dharmesh, should someone accumulate Power Grid in such a volatile market?
Definitely, yes. I agree with Vinit what he said. It's a good compounder, around 15-16% kind of PAT CAGR you will see in the next 2 to 3 years. And this is what has been the track of Power Grid. Steady state kind of a business, almost fixed kind of a revenue and bottom line, no deviations out there. And mid-teens ROEs over well for Power Grid. So my own senses by FY20 the EPS of Power Grid would be 20 rupees. So that discount that it's 10x PER multiple which it is trading now. 14-15 is normally it attracts. So 300 is the target price I am looking for Power Grid for next 2 years. So a good kind of 40-50% kind of a return can be made out there. So yeah, one should be accumulating that.
Okay, and what about you, Ashish? What's your view on Power Grid?
So Darshan, I think it's a positive stock. In fact, in a volatile market, as you asked, mentioned very clearly that what kind of stock should be ideally be accumulated, and I think Power Grid fits into that criteria. On downside, very limited downside, but at the same time, one can expect 235, 240 levels. And reason being, if you look at fundamentally capex, the company has a capex plan of almost 81,000 crore over next 3 to 3.5 years, and we are expecting that PAT to grow at almost 14% CAGR in next 2-3 years. And generally this company has typically maintained 15 to 16% return on equity on the capitalized assets, and keeping in mind the kind of capex the company is expected to in next 3.5 years, I think good return on equity could be expected, and that too in a space which is very heavy in terms of utility space, which requires huge capex expenditure. This kind of return on equity is definitely good. Apart from that, this company is trying to diversify into renewable battery charging as well as and EV charging as well as battery storage. So all this keeping in mind, I think Power Grid offers a good potential.
Okay, so all three of our guests do believe that Power Grid offers good level of accumulation. So we'll throw the discussion open for counter questions and questions. Vinit, what seems to be the key risk for Power Grid? It's not something. Why is Power Grid never a good compounder? Why is it always being used as a defensive play?
So its returns are based morely on regulated earnings, and they have to keep doing capex to grow. So the debt also keeps getting accumulated. But I think with the telecom business coming in, railway opportunity coming in, I think this will get distended a bit in favor of the company.
Okay.
So I'm more positive than on the. I don't think there's much of a risk out here. See, they control the T&D business. Interstate, intrastate. Okay, they're looking at international opportunities. So risk is going into new geographies where they are not able to manage the local geopolitical events. That is one. Second is too much of capital inflow needs to be continuously be pumped in because it's a regulated business.
Okay, Dharmesh, do you share the same concerns in terms of the international operations, what they're looking at, and with power plants actually not coming up, there is significant amount of and the capex cycle has actually not picked up. Is that not a risk for Power Grid going ahead?
See, I don't think power plant not coming up is a problem for Power Grid, because what we are looking in the power space is transmission and distribution. So that is the last mile connect where the opportunity lies in the entire power segment. And why it has not been a compounder is because of everything is regulated. Your earnings are regulated, your capex is regulated. 90% of the transmission lines are owned by Power Grid in India, and it is all on the basis of government, orders being coming into the flow. So there's no scope of exponential growth.
Okay.
So in the stock market, we look for some supernormal kind of a growth opportunity, which is not there. So any steady state kind of a business and highly capital intensive kind of a business it is into. So again, debt equity ratio, if you see 2.5x to 3x kind of a debt they have to raise for any new transmission lines being laid down. Foreign opportunities, they have the know-how, but how much they are able to capitalize, being the fact there still is a PSU company. So that remains a big concern for Power Grid. And the other optic fibers, telecom and all, I don't think that's a big opportunity for Power Grid. So it's like in a volatile market, to play safe and keep your capital intact with double the FD kind of return if you're looking at, then it's a play. Otherwise,
okay, I think the consensus view that we're getting in on Power Grid is that in such volatile markets, it's a better opportunity to park your money with companies like Power Grid. So it's a consensus thumbs up from all three guests. The next stock that we want to speak about is Tata Global Beverages. Had been a marked outperformer till recently, but the counter has corrected close to 20% from the recent highs. So we are asking, post the correction, is this the right time to start accumulating Tata Global? Dharmesh, should someone buy Tata Global at this level?
See, from trading perspective, yes. Again, same defensive kind of a play, volatile market, the stock is corrected and stabilizing here. But I don't see fundamentally why one should be buying Tata Global. To me, it's still expensive. The company has not been doing anything. They have been launching their products, but none of the products are getting traction. If you look at the top line, it has been steady state kind of a top line, no growth out there. Q3 numbers was good, but that was not because of realization getting up or top line getting improved. It was primarily because of the cost savings they did in selling and administration. I mean, advertisement expenses, around 50 odd crores of saving was there. That translated into a better bottom line. So a company which is delivering, operating margins are single digit, PAT margins are, 5-6% kind of a PAT margin, ROE is at 5-6%, and no growth opportunity in spite of being such a big brand. All advertisement, everything, they have been unable to get the market traction. So I don't see, apart from a trading opportunity, any wealth creation opportunity Tata Global.
Okay, well, no wealth creation, it's mainly a trading opportunity. What about you, Ashish? Should someone buy Tata Global?
So after a steep correction, I think yes, offering a good opportunity to initiate a long position. Technically also, we saw a very strong uptick and then some profit booking of almost 20%. So it's offering a good opportunity to enter a long position. Now whether this can give 40-50% kind of returns looks difficult. Maybe another 20-25% kind of returns could be made from current levels. Now reason being, it is now, as far as the company is divesting into non-performing businesses. So most of the non-performing businesses, they are trying to take an exit. Apart from that, they are investing in the incubatory businesses like Starbucks and all, and trying to open new stores. And also, it's a leader in the black tea. So I think now focusing on entering into large, tea consuming Asian markets like China, Malaysia, and Singapore. So that is also a key trigger for the stock. Apart from that, if you look at in terms of valuation, it's trading at 2.5 times market cap to sales. So now most of the FMCG companies, obviously, they are offering a better ROEs and also, but at the same time, most of the FMCG universe is trading 4 to 5 times
I'll get back to you on
sales.
this point on terms of valuation. Vinit, would you buy Tata Global?
Yes, I would.
Okay.
I think among the FMCG stock, if there's any one company which has got a visibility of growth opportunity and capitalizing on that, is Tata Beverages. I think Tata Group is in a spring step where they are selling out businesses which are not performing, and this is going to see a good churn in non-performing businesses that will improve valuations, return multiples. Apart from that, I think all the portfolios are getting revitalized. So Starbucks is doing well. They're growing in a measured way. So they're maintaining their margins and their spends are very high. If you take the tea portfolio is refreshed, coffee is doing well. Beverages, they have made new fronts. They've tied up with Pepsi. So there's going to be a lot of value unlocking in the unprofitable businesses and investments in the growth businesses. So I think there's a consensus estimate that 10-11 rupees is the earnings for FY20. I won't be surprised if we do 15.
15, okay. So we'll throw it open. I think two of our guests do believe that it's a good opportunity. Dharmesh believes that it's more of a trading opportunity for this. Ashish, I'll start with you. You were speaking on valuations where I cut you off. You can. What were you trying to say there?
I think, see, it's trading at 2.41 times, market cap to sales. But if you look at the other FMCG players, they are trading 4 to 5 times market cap to sales. So I think, in terms of downside, it is very, very protected. Now, if the initiatives which they are taking out and it works out well, I think there will be a serious re-rating which might happen in the stock, and that can lead the stock in a significant way. But at least in a shorter term, expecting a 15 to 20% kind of returns from these levels looks very much possible.
Okay, very much. Dharmesh, valuations was one of the things that you said, but compared to the FMCG stocks, 30 time next year earning is considered cheap for a FMCG or a consumer stock.
See, any FMCG stock which goes 40-45 times PE multiple, ROEs are also 40 times, 30 times.
Yeah.
It is not 6.5, ROE and getting a valuation of 40 and 30. So first you need to understand what valuation metrics we are looking at, not single factor.
Sure.
So Tata Global, last 3-4 years, everybody is gung-ho about the products, be it green tea, decaffeinated tea, different brands of coffee, but nothing is working out. Where is there in the numbers? So value unlocking concept looks very attractive, but where's the value? That should be there in the numbers, right?
Vinit, where's the value he's asking? Single digit ROE?
So I think ROE, if you see once you remove the unprofitable investment parts, ROE has come to about 12%.
Okay.
I think over the next 2-3 years it will move to 17-18%.
How?
Margins are around 11%. They will move to around 16-17%.
So what's the trigger?
Yeah,
how it will happen?
So I think the refresh tea business, Starbucks is, if you see the way Starbucks is doing, they're doing 3 lakh crore sales per store compared to 70 lakhs for Cafe Day. And if you compare 4 players, you take Jubilant, you take Westlife, you take Starbucks and you take CCD, I think it's top on every aspect. Okay. So maybe the spends are not as much as a Jubilant, because the ticket size is very large. But it's a all-day dining kind of restaurant. You go at any time of the day, people are out there having coffee. Okay. So if you just do a scuttlebutt, I think that value unlocking is going to come through. Okay. And they've been very sensible in opening their stores, so they have not gone into an low spend markets. They're consolidating their stores in high spend markets. So that strategy is really going to kind of give them disproportionate profit.
Okay, so we'll discuss about Tata Global, because I believe that's the stock that you would want to recommend for a long-term hold. That's the last one. But we'll come back to and discuss more on Tata Global. But the next stock that we want to talk about is NMDC. Now, the counter fell yesterday significantly. There are 2 issues that happened. One of them was the iron ore prices, which are down almost 10 to 15% from the recent highs. And as everyone was expecting a dividend to come in, and NMDC actually did not give any kind of dividend this time around, and that was the big concern that the market has. Metal stocks are plunging on the fall of Chinese iron ore prices. Is more selling likely on NMDC, or should someone accumulate? Dharmesh, any view on NMDC? It has fallen significantly.
Yeah,
is it the right time to buy?
Yeah, valuation does look attractive. At the same time, headwinds are there for metal stocks. So this comes on the backdrop of China cutting steel production. At the same time, iron ore prices are falling. And protective measures being taken by US. If the entire thing has to be read into context, it does apply, pain in the metal space. Okay. So the growth opportunity, which apparently looks like on the steel side, may not be there on the global front. Domestically, India may still see a growth because of the lot of investments being coming around. And Fe content wise, if you saw lower Fe content, like 62% Fe content, which is there, with the iron ore prices of China, which has dropped, they have dropped very significantly. But higher Fe content, 65% plus, there the steel iron ore price correction has not been so sharp compared to the low content. And NMDC has 70-72% Fe content. So it's relatively protected. But yes, at around 114, 120 price levels, it does look to be very attractive buy.
Okay, very attractive buy. What about you, Ashish? Any view on NMDC?
So I'll be a little skeptical. I think it's going to trade sideways because the earnings which we saw lastly, it was because of Orissa mine closure, and I think Orissa mine start operations if once Supreme Court allows operation, and this will result in rollback of the price hikes which we have observed in last couple of months. So I think, and apart from that, globally we are seeing a significant fall in the metal prices, and with China talking about shutting the steel production, so also this is going to have some pressure. So I think it's not about NMDC, entire commodity as a basket might see some selling pressure, at least in a near term.
Okay, so you believe that there could be more potential downside in NMDC. And Vinit, what's your view on NMDC?
It's a no-go for me.
Okay.
Okay, so I think the immediate trend is oversupply from the iron ore. One is the crash and impending restart of mines in India. So I think pricing will be under pressure. They will of course have maintained their leadership position in terms of volumes, but that is already factored into price. One trigger would be the sale of their steel plant.
Okay.
So there they've invested 13,000 crores. Is a 3 million ton plant. So if that gets sold, then the trigger for an upside is there.
Okay.
So at this point in time, it's a no-go.
Okay, so I think one of our guests, Dharmesh, is believing that it's the right time to start accumulating NMDC. Risk reward is in favor, but the other two guests don't believe that there could be potential, upside in NMDC. What went wrong with NMDC over the past few quarters? It's not performing as the market had anticipating. Is that internal factors or external factors that's affecting?
There are a few internal factors. See, barring the iron ore prices, which is very cyclical and fluctuating in nature, very price sensitive. But at the same time, the steel plant which Vinit was talking about, it was supposed to be commissioned by 2015 May. It got delayed, and now the last, as per measurement, by October this year, it should be commencing. So it's a 3 million ton steel plant. A lot of money has gone into it. Thankfully, through internal accruals, this entire funding has been there. So that can be one trigger going forward. And the sale thing, when this, the idea was when it was floated, that time steel was in a downturn. So they started to sell it. They did not find a suitable buyer for that. So now the thought process is they would be continuing with the operations.
Okay.
So if that happens, maybe better operational efficiency and all things should fall into play. Domestically, steel is on the upswing.
Okay.
And as Ashish pointed out, Odisha mine closure and all augurs well for NMDC, because that should stabilize the iron ore prices in the country. If the mines are not functional, there is scarcity of iron ore. So whatever is available through the mines, they should see a price traction. So to my mind, just on the valuation comfort, 11 rupees kind of an EPS they will be posting this year. Next couple of years, 14 rupees. So even 12-13 times PE multiple if you get, 160, 170 can be the likely price target. So 20-30% can be made.
Vinit, how big is this steel plant for NMDC? You would just to get a gauge of.
So it's 13%, 13,000 crores versus a market cap of 37,000 crores. It's a sizable investment. So if that has to come through, see, they don't have any experience in running steel plants. So that's a risk. That's an operational risk. Okay, but given the fact that they have the iron ore supplies, it's a forward integration. I would be more happy with them selling it rather than doing anything with it. And I think there would be buyers for the plant because there's a lot of appetite for acquisitions. So if you look at JSL, JSW Steel, which has not been able to get anything going, this might be one good criteria because JSW has got many mines in Karnataka. They also have a lot of captive iron ore mines there. So that would also be benefit them if they take up the plant.
Okay, so I think the consensus view that we're getting is that the re-rating factor could probably happen in case this steel plant sale does happen. But Dharmesh is bullish on the counter at this point of time. The other two guests are not at this point of time. And the last stock or stocks that we're asking is, the market has corrected, or the Nifty is corrected almost 10%. Some of the mid caps are down 30-40%. Is there a good investment opportunity for a year or two, at least a long-term view that we are asking our guests? So we'll start. Ashish, you pick Jubilant FoodWorks. Why?
Looks very interesting in the consumer discretionary basket. I think solid operational performance of almost, with the top line growing almost 21%, operating profit margin to the tune of 17%, and same state sales growth almost 17-18%. So this shows the the management focus in the business and optimization across segment. Let it be employee cost, let it be other expenses, and the Dunkin' Donut losses also has reduced significantly. So keeping in mind, I think, and apart from that, there is a accelerated store opening which is being seen. So keeping that in mind, I think Jubilant Food has a potential to at least deliver 20-25% kind of returns from current levels.
Okay, 20-25% upside in Jubilant Foodwork. And Dharmesh, why do you like Oberoi Realty?
Just on the valuation account, see, Oberoi Realty will see a huge re-rating going forward if things play out. Around 14,000 odd crores of revenues is likely to be booked in next 3 years. So present run rate is 12 to 1300 crores per annum. So this can go exponentially with the biggest project, 360-degree West South Mumbai Worli project alone will fetch around 8,000 odd crores of revenue because the flats are still to be sold. Assuming the present real estate prices which are there prevailing in the different pockets. So my own sense is 4,400 crores of PAT will come accrue to Oberoi Realty in next 3 years. And they have a book value of 5,500 crores. So 10,000 odd crores of book value based on FY20 estimates. And the market cap is as of now 17,000 odd crores.
Okay.
So usually 3 times price to book. So that's the reason.
Yeah, so basically on Oberoi, I just want to ask because there's a high chance that the ready reckoner rates may come down, the prices may come down. That's one of the concerns. And second concern is oversupply in some of the areas that it operates. So is that not a concern for Oberoi?
No, the areas in which Oberoi operates, this oversupply may be there, but for inferior properties.
Okay.
So it's a premium property if the same rate is there. And as you pointed out, if ready reckoner rates come down, it's beneficial for Oberoi Realty.
Okay.
Because the price which they will command the same price. At the same time, buyers get a comfort by paying less taxes.
Okay.
So that's the advantage which can be there.
Okay, but are you overall bullish on real estate or only?
No.
Just
stock specific, selectively. And Oberoi stands the best chance out there.
Okay. And we were discussing Tata Global, and I believe that's the top pick. Now, is the bet not only on Starbucks? Do you see the other businesses also grow significantly? Because Starbucks, as you pointed out, you said that there is, but what about the other businesses?
So I think all businesses are being refreshed. They've rejuvenated their tea portfolio. Coffee is doing well. The beverages business they've got in glucose has been doing well. So I think they've got their act together. And I think all businesses will start firing.
But what's the one re-rating factor that you believe that, it can be a good compounding story, but what is the key trigger that, will say that this can be a big multi-bagger sort of stuff?
So it's not a multi-bagger, but I see 4 things playing out. One is top line growing well, margins expanding, okay, profitability improving, okay, and as a result of which P re-rating continuing.
Yeah, but how will margins expand? That is, what are you forecasting? Because you say the return ratios will improve, margins will improve. What are you seeing?
So it's a low single-digit margin for even Starbucks.
Yeah, so
I am seeing all that grow now.
But
all
how?
the economies of scale are coming into play. So all that will lead to betterment going ahead.
Okay. And that's the bet you're playing on this.
Yeah.
And what about, Ashish, you were speaking about Starbucks. You spoke about the 17% SSSG, but don't you think that's Jubilant, sorry. That's not a one-off that because the last few years have been really bad and now they will come on a high base. So do you think that this 17% SSSG will probably continue for Jubilant Foodworks going ahead?
So I think after almost 7-8 quarters, we saw a clear structural trend being developed being seen in the SSG. And apart from that, the new CEO who has come, he has a lot of focus on product innovation also. So if you look at in terms of menu, a lot of product innovation is being happening. And if you look at, we are just talking about 48 times multiple financial year 20. So which is in a discretionary spend, I think it's fairly valued. So I don't think it's expensive at these levels.
Vinit, any view on Jubilant? Because we were discussing Tata Global and we discussed Jubilant and how.
Yeah, so I'm in consensus with him. I think they beat the best estimates of the best analyst on the street by a wide margin. And I think that will sustain.
Demonetization quarter.
Yeah.
So low base, very low base.
Yeah, no, I think those margins will sustain. And I think now they've got their act together also. And spends are also improving. So given all these 3 things, I think the valuations will also start moving up.
Okay, and you had a point on Jubilant.
Yeah, but see, the numbers which came last quarter was year-on-year it looked very rosy because it was of a low base of demonetization effect. And mostly it's a cash spend which you do in the stores like Jubilant Foodworks. So that was badly hit same quarter last year.
Okay.
So I think not much should be read into that numbers. Let it follow up. If the follow-up comes in Q4, then maybe yes.
Okay, so I think the view that we are getting in is that Dharmesh believes that Jubilant Foodworks you need to watch more, but Ashish as well as Vinit are bullish on Jubilant Foodworks. Vinit's top pick is Tata Global. We already discussed that stock in much detail, while Dharmesh does speak about Oberoi Realty as being his top pick. With that, it's a wrap on today's Hot Money. Vinit, Ashish and Dharmesh, thank you so much for joining me on the show. Ask BQ comes up next. Stay tuned to Bloomberg Quint.